What is going on, guys? This is obviously Jordan here, back again with another video, and it's not usual, for me to sit down, film, edit, publish, and all that stuff for a video in one day. But we've got breaking news today over on the other side of the pond with Tesla. And if you haven't already seen the news, Tesla's finally been included. Well, it's not even been included yet, but they've been announced that they will be included in the S&P 500 index, which is very, very big news. One, from a finance standpoint, from an investment standpoint, from tech, from an investor, for this channel, of course. Like, it's pretty interesting news. So today we're going to talk a bit about that. Obviously, in the past, I've talked about, buying Tesla stock. I've talked about selling Tesla stock, and a lot of that came around the time of early during the COVID crisis, when the market was a bit volatile. What else happened? There was a stock split, which encouraged me to sell Tesla, some of my position in Tesla. And because it's talking more about more investment news, and I've even got more investment videos coming out that I'm trying to get more technical about it, I thought this news would be very, very big, and it would be very, very, very interesting to talk about. And especially on the topic of like whether now's a good time to buy more or sell more, like what's going to happen next, and all things like that. So I'm going to quickly sit down, run through the latest news, run through my thoughts, and then we'll see what you guys got to say down below in the comments. I actually wrote down a couple of quick notes on my phone because it's like, I feel like at the time I'm like, what? Tesla's been included in SP 500, and I had like a physio meeting this morning, so I had a lot of stuff going on. I couldn't get record straight away. So I was like, throughout the day in the shower, I'm like taking notes. Like, this is what I'm going to say a bit later on. But it's mad, man. It's a crazy time. So for those who don't already know like what Tesla is, what it's about, I mean, first of all, I'd say go back and find out. But in a nutshell, like Tesla's had a very, it's a auto making company. They make cars, electric cars. A lot of their business, to be fair, comes from like technology. It comes from the solar panels and battery cells, and of course the cars as well. But run by Elon Musk, who's now, as of the news today, like the Tesla stock. You know what? Because Tesla's been in a very shaky state for about a good couple of years. So basically, since they were introduced, like what, 12 years ago or something. But this year, it's rallied so high. It's been such a great year for Tesla. I think the shares are up like 500% last time I checked, or like 480 last time I checked. And then this morning, well, like last night even in America, but after hours trading, it was up like 15% just on the news that we're about to be included in S&P 500, and that's crazy stuff. And this year alone, Tesla's shares have been continuing to skyrocket from all-time high to all-time high, with a current valuation of about 384 billion, which, just by saying that number doesn't really mean much. People don't know that, average companies, but essentially the S&P 500 is the top 500 companies in America, based on their market cap, and Tesla's coming in at like 10th at the moment based on this valuation. So it's pretty crazy. It also means that Elon Musk is now like the third richest man in the world, or in the publicly disclosed net worth category of that, taking him above like Mark Zuckerberg, I think, into third with what, 120 billion net worth. Like, it's crazy times, man. It's crazy times to be Elon. It's crazy times to be working for Tesla. And yeah, that's a brief overview, I guess. That also means that Tesla are the most valuable car company in the world, with a valuation of, as I said, like 350 billion pounds, dollars even. So I guess, what does that really mean, and like how did we get here? For me, like, I personally think a lot of the inflated you see that? Okay. For me, I personally think that a lot of the inflated share price comes down to, what did I said? I wrote it down in the shower, as I was saying. I think, yeah, the astronomical rise in value came from the several factors, including retail investors being bored during lockdown. Like, I think a lot of retail investors, like myself, probably some of you guys as well. Retail just means like, we're not like big institutions, just regular guys with like an app and some money to spend. I think a lot of us, while there was no sports, there was definitely like a big upturn in things like Robinhood in America, Trader 212 here, all these like different apps were, because people were kind of bored, I feel like, and had extra money to spend. They just felt more free making these casual bets, I guess. And even outside of the bets, I think people looked into it a lot more. People knew a lot more about investing, and they decided now is going to be a good time to actually, sit down and get their money right. But I also think Tesla had a very impressive run this year anyway. Like, as far as I can remember, at the start of the year, Tesla were the only company that had online sales, while most car manufacturers had to go like to a showroom or to not a garage, but like I forgot the word for it, but it's like, there's like, let's say for example Mercedes, they have their own like actual Mercedes showrooms, but there are also these like showrooms that have all the different types of cars from like different producers, and other cars sold like through third-party garages as well, like that. So Tesla, as far as I can remember at the time, were the only company that were actually doing, most of their sales online, and they made the process so easy where you can order it in like a minute. So it's pretty crazy, and I think those impressive numbers, not to mention like growth in China and all around the world apart from just America, meant that Tesla, compared to all the other automakers, was just doing really, really well. So I think those two things come together to benefit Tesla in the fact that they had a very good year. As soon as I start recording, these band are going crazy outside, but it's fine. Car Chronicles, this is a game when you haven't got a proper studio. I honestly think like ESG firms, well, ESG is like environmental, social governance, and I think a lot of sustainability focused investment firms and stuff like that, and companies, I think they're gonna have a very, very good time now because of like COVID, other health crises, general, people's general atmosphere and mood and feelings towards climate change and sustainability. I think can be a very good year. Looking at Peloton over there, they had a very good year as well. But anyway, the S&P 500 is basically, yeah, so I don't know why I put this under the notes, but it's good to say, I guess. Where it's an index fund that tracks the top 500 US companies by market cap. So basically, you can own a small piece of every company for one price instead of buying and managing like 500 individual stocks on your own. Very few investors can beat this over a 20-year fund, 20-year spell, sorry. Like I got a bunch of links here from like Warren Buffett saying how like 95% of investors fail to beat the market over like a 20-year spell, which is crazy. It goes to show that if you really, unless you're like a proper serial investor, and not even just a proper serial investor, like even if you are a proper investor, unless you're in the top 2% of that, top 5% of that, you're probably better off just buying into a typical index fund, S&P 500 index fund. But yeah, that's why it's a big deal, because like, yeah, market cap is the number of shares multiplied by the value of shares. But it's a very big deal because, not to be overly technical, I wrote down all the technical numbers in it, but I'm not going to go too much into the specific details. But because Tesla's market share is about 350 billion pounds, and the S&P 500's like overall valuation is about 30 trillion or something. I did the math earlier. That means Tesla's, as you're buying into, I've written it down some of the actual better words to say this. But when you add a company into S&P 500 index, you're buying the amount of stock that's proportional to the relative market share of the entire index, which means Tesla comes in at about 1% of the entire index. So people need to buy about 120 million Tesla shares, which obviously I've got it all written down here. You're just gonna have to trust me on the maths. But it's like, that basically means that 15% of the current Tesla shares on the market are all going to be absorbed by like these big index funds. The reason for that is because, again, not to be overly technical, but some of the shares in every company is obviously owned by the board of directors, by the CEO, by the chairman, all this stuff. So some of those shares are like, it's called float shares. Float shares are the ones that are like tradable, like are owned by the people, I guess, that are constantly in rotation. And the ones that like aren't, non-float shares, they just kind of stay there by the guys who own it. So when you take into account, as I said, all the maths, I've done all the maths, but I think it's like way too technical for most people to get, like most people that follow the channel at least. It basically adds up to about 15% of like the non-float, of the float shares of Tesla, which, as I said, is about 120 million, which at a current valuation of like $400 per share, it's a hell of a lot of money. It's like $50 billion, which is changing hands over the next few months, well, month and a bit, which is like very, very big. For people that don't, I know a lot of people seem to think that when you trade, the money it doesn't go to Tesla, basically. Like, the best way to explain it is like, if I sell, my phone, the camera lens, cap, and all these things to someone, those are my shares. I sell them one time for whatever amount of money. I cash in that one time, and then anything else that happens afterwards in the market, that's between like all those investors that are trading the share. It doesn't affect me. It only affects me when I like issue new shares, or if I do a stock split, which Tesla done recently, it was way more than that, to be fair, but they split their stocks 5-1, and you do all these things to bring more money in. But fundamentally, the stock price is just the market appreciating what determining the value of your company. It's not actually money that's in your pocket 9 times out of 10. So that's just I think that's important to say. But yeah, so what does that really mean? Where do we go from here? I already talked about how I sold off. Wait, I think I've missed a big part of these notes. I really need to get better at like scripting and actually using these notes. But nah, like, where do we go from here? Yeah, so I already talked about selling off some of my Tesla stock in a previous video. That's because of the stock split. Like, I thought the price was very, very high. I think it was overinflated by just the times. And to be completely honest, I even think now it's inflated by the times. I think people are just buying in with the expectation that when Tesla's eventually included in the markets, in the indexes on December 21st, yeah, I think a lot of people are just buying it with the anticipation that these firms and indexes and these fund managers will go and buy that share off of them later on for a profit. But I think what people don't really realize, to be fair, I don't even know if this is completely right myself, but I've read a lot into it and I've heard a lot of people talking about it, and there seems to be, it's not a consensus, but I feel like from what I've read, it's like some of these funds can't actually buy Tesla in advance. Because if everyone went in at the same time, at the same day, just 21st of December, 9 p.m., 9 a.m., whatever America time, and just bought into Tesla, that would cause a massive spike in the markets. Not to mention, like, if they're trying to buy 120 million funds shares at once, if no one's selling their shares at a time, like, how the hell is that? You know, from a back office standpoint, it doesn't really make any sense. It's very difficult to explain how these men can just go in and one day buy all these shares and, you know, have no impact on the markets whatsoever. Like, what will end up happening is someone's going to buy it. The first firm will come in and buy it at, you know, $400, whatever it's worth now, like $465 after market hours. But someone will buy it for like $465. It will spike up because there's a lot of people buying it. Then the next fund manager will come in and it'll buy it for like 500, then it'll be 600, and then it will just be like a ridiculous spiral of just mad numbers, I think. And that's what I think. I don't work in finance. I don't actually know the technical details of it. But yeah, it's pretty interesting. I feel like it's going to be, like, a lot of research would suggest that most of the impact of the S&P 500 inclusion, most of the impact that has on the stock price happens on the day of the announcement as opposed to like later on, and it will continue to climb, you know, a little bit, little by little, up until the actual day is included, and then it will flatten out again to a new normal. And then a lot of research would suggest that over like a month, 2 months, even 3 months, it just comes back down to normal anyway, to back to where it is now anyway. So that's what I think, is I'm probably better off just selling it, and I'm probably better off doing a lot of my investing, as I should be doing anyway, through my lifetime ISA, which I'll talk about a bit more in a minute. But yeah, man, like, I got my receipt here as well. I sold half my Tesla stock when I put out that last video, and I sold it for about $480. So like just shy of the previous high, well, the actual all-time high, to be fair, of $498 and something like that. So even though I'm selling now for like, what, $460, it's a bit of a loss relative to that. That just goes to show how crazy the market is. Like, I remember I put that video out and people were like, why are you selling now? Tesla's been having a crazy good year. It's going up, 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 up. And then what do you know, within an hour of me selling it, it's just plummeted, and it's been way below that ever since. Even now, it's still below what I sold at before. But, you know, keeping half of my money in the market was just me not necessarily playing the game, but it was like, I wanted to see what would happen, and I was speculating, because I know a lot of, obviously I'm an investor, I know a lot of inside stuff, well, not necessarily inside stuff, but I know what's going on, I stay up to date, and I was like, it could go either way. So I'd rather, you know, I want to cash in some of my profits now, so I'll sell a bit of it, but I do want to keep some as well, just in case, just in case I'm wrong. And it turns out I was right. But again, I can't guarantee that it's going to keep going up. It can't guarantee that it's going to keep going down. Tesla, as I talked about in the past, is a very, very volatile stock to hold. It can go up tomorrow 50% and then down the next day 50%, and I wouldn't be surprised. Like, it's just very volatile. Things are very crazy. And yeah, that's essentially it. Like, I'm still a long-term supporter of Tesla. You know, okay, yeah, cool. Yeah, so that's what I was going to say anyway. Like, I'm still a long-term investor. I still believe in Tesla long-term. I still believe in the vision. But I think for me right now, it's difficult to justify holding like thousands of pounds in an investment in different stocks and shares and stuff, while I'm an unemployed student in second year with like very limited career prospects. Like, I really thought this year was going to go a lot better when I did invest. Even though I can afford to leave it in there, I don't need the money desperately. It's like, I'd rather know for sure I've got, you know, money in my pocket in case I need it, as opposed to having all this illiquid, you know, money in the wild and stocks that could go up or down either day, any day, whenever the hell they want, basically. Especially Tesla. I think for me, like, I'm still, again, I know I've gone like 20 minutes into this video, but I'm still not a financial advisor. This is not financial advice. I'm not telling you to buy Tesla or to sell Tesla or nothing. This is just my opinion based on like the time. But yeah, I think it's very hard for me to justify it, especially when Tesla, with all these gains and all this growth, has made Tesla again like 80% of my portfolio, which is crazy. I can't just keep having Tesla dominate my whole portfolio, because in any day that happens, if it goes up or down, because if Tesla does go down, that's basically all my money is effectively gone. So I'm not, when I say I'm going to sell it, I don't mean I'm going to cash out entirely. I'm going to like redistribute my funds, so I still have money invested, but in different, more diverse assets and stuff. And some of that's probably going to be on the channel, but you know, we'll see how that goes in the next couple of weeks. But yeah, that's the final point. The final point that I've got written down in my notes is that I also own S&P 500 shares anyway, so it's not like I'm going to be losing out on money. Like, once Tesla's included in the S&P 500, I'm technically going to own a piece of Tesla through that share anyway, so it's not actually that big a deal. When I say I'm selling it off, it's not like, I don't want that anymore, or F this. It's like, I'm still involved, I'm still heavily invested, I still heavily believe in like the long-term vision of Tesla. It's just like, right here, right now, it's just too crazy, and I'd rather cash in while I can than see it drop drop tomorrow to new lows. So yeah, that's essentially it for me. Those are essentially my thoughts. I touched on briefly earlier that I was going to probably invest through my lifetime ISA in future. I've talked about that in the past in another video, but the American equivalent to that is like the Roth IRA or something, or the 401k, one of those two, where basically it's like when if I open a stocks and shares ISA and I invest through that, your investments are tax free because it kind of comes out of your income, and all of your potential, capital gains on that also aren't taxed. And the extra benefit of the lifetime ISA that I already have open is that the government then go and add a 25% bonus on top of that, up to $4,000, well, up to a grand bonus, but I can put in $4,000 a year. So if I end up putting in 4K into that account, government will match 25%, but put another grand on top of that. That's £5,000 that I have to invest, tax free. Whatever capital gains I make on that, it's just like it's all made in that account, so I don't get taxed on it. And then on top of that, the caveat with a lifetime ISA is that the money has to be spent on a house, or it can be given to my retirement, but I'm not doing that. I'd rather have a proper pension where I get like employer contributions. That probably works out to way more if I put more money into that pension. But either way, there's money to be made. I just thought I'd get this video out, and I don't really post twice a week unless like I've got extra video to make. But I think this is obviously like an emergency thing, big news, breaking news, whatever. So yeah, those are my quick thoughts. Let me know what you guys think down below in the comments. If you enjoyed it, hit the like button, subscribe for more. Again, for the last time, this is not financial advice. Don't go out here buying Tesla stock or selling it just because I said so. I have no idea what I'm talking about. As I said, I'm an unemployed, useless uni student with a Financial Times membership, so don't take me too seriously. But yeah, I hope you guys have enjoyed it, and I'll catch you in the next one. Peace.